Good morning, friends. How you doing? This is the Zero DTE morning market analysis, and it is Tuesday, April 22nd. And top on the overnight macro conditions is that U.S.-China tariff wars are still heating things up. That is what's causing our volatility to stay elevated, and why we're still in a very bearish mood, and why puts may explode today. I mean, if you look at the volume profile, we are just inches away from a big drop, and that always weighs heavy on the markets. So I was a little bit late today because I was putting together some analysis here, and I wanted to really show you exactly how I come up with the story to talk about why it's the highest ranking story today. So like I said, today, top story, U.S.-China tariff escalation fuels volatility. I go through a number of things, and it's all AI enhanced, advanced prompting, really heavy-duty stuff. So how I pick the top story. If you're ever wondering how I do that, and it's specifically geared around the Zero DTE, I sift through all the overnight chaos, find all the major developments that are driving max volatility, whether or not how's that going to introduce our playbook of trades. And tariffs basically won the top spotlight. Now, there are a number of things that we're looking at, but tariffs were top on that list. And every morning I generate a report for our members that will show all the top indicators of the top opportunities, and then rank them according to their probability for a statistical move, or based on standard deviation. Is it going to be more than 2 or 3, and what is the probability of that happening? But I look at the volatility impact. We rank macro events like IV spikes, targeting things that are greater than a 3 standard deviation move. We sift through all of that and look at the SPY, the QQQ, and earnings as well. We're looking at market breadth, prioritizing stories hitting multiple assets. These are my notes. I'm reading them. So if I don't look like I'm delivering this, it's because there's just too much here for me to remember in my tiny little noggin. And tariffs, they slammed the Nikkei overnight. That was reported by Yahoo. ES futures are down, reporting by the CME. And they're both impacting SPY and QQQ, as well as the CL, that's crude oil. And that source came from Yahoo Finance. So everything that I'm doing is very well financed, brought together in a consolidated report. And then I look at X sentiment. So we're literally going to x.com, formerly known as Twitter, and looking at the stream of tweets that are coming through that for the past 24 hours, and getting a sentiment analysis. And right now it's 65% bearish. So there's been a lot of SPY and QQQ chatter, and that's what's really fueling volatility for puts. All right, and that's all based on the X sentiment analysis. And then we cross-verify all the data with the CBOE, Reuters, although I don't know about Reuters. Sometimes I wonder, that Thompson family, they drive me crazy. And so, yeah, we put that all together in this big stew, come up with what we feel are the highest ranked things, and that's how I report things back to you. Just thought you might want to know that. So, it's not just me sitting here just flying off the handle, coming up with my favorite story du jour. It is all solidly information-based, based on the analysis of what actually happened overnight, and using the big mind of Grok, by the way. And the reason why I'm telling you all of this is that we have a new service that's coming up that is going to be heavily AI focused, and part of the service will be teaching you how to get the most out of AIs through advanced prompting. Now, one of the reasons why I'm bringing this up is that I was looking through and noticed that there were some prominent people that were talking about cheat sheets for prompting on AI. And I thought it hilarious because the way they were doing it was essentially looking substitution methods. You come up with a short phrase and then you substitute in the words and then you use that as a prompt. And I'm saying, that's so lame. If you really want to understand what's exactly happening out in the world and get the best possible return from the LLM that you're using, you need to employ advanced prompting that goes way beyond that. I mean, light years beyond that. And that'll all be incorporated into this new service. And you'll see it coming on. It's called the Fat Tail Protocol, and it will be a school-based service. It's where we're looking to essentially put on trades that are, I would call them insurance. I would call them looking for fat tails, but it's going to be very interesting. It's based on, roughly based on the Universa Fund that famously made 4,000% in 2020, in March of 2020. And it's looking for those kind of returns. Super low risk, high impact. So stay tuned. I plan on releasing that whole program probably this weekend. And we call it Fat Tail AI because that's the other component of it. You're going to not only learn the strategy, which is, absolutely incredible, can take a very small account and just blow it up, but you're also going to learn how to become an AI master. All right. So anyways, I didn't plan the show to be about that, but I mean, it's I've been working on it for the past 2 weeks, getting it all prepared, and it's just the top thing on my mind, and you need to know about it because it's going to be really special. So let's get to the charts and to our analysis. And here we go. All right. It's not the chart that we want to start off with. We always start off with the VIX because that's our playbook. And virtually everything that we do as Zero DTE traders is about the VIX. And as you can see, it's slightly elevated today from yesterday. Yesterday it started out at about 31. We had a little bit of a pullback, or not a pullback, but a retracement that came up and took away some of the down move that we had yesterday. But we're still right up there at about 32.51 above the Goldilocks zone in chaos. So when it comes to the type of strategy that we're looking for, it's either a put fly that's super wide or we're looking at a Batman. All right, and again, if we're putting on a Batman, those are two out-of-the-money long flies, a call fly and a put fly, and you want to make sure that the total risk will still come out to about a 1-to-9, 1-to-8, 1-to-9 risk-to-reward ratio. That means that each individual call fly needs to be like a 1-to-16, 1-to-17. That might seem like totally insane, but you'll see the efficacy of it. For one, you won't have to manage the risk because most of the moves will end up right in the middle, and then a minority will go either up or down. We're not really choosing direction on the Batman, obviously, because in this high volatility environment, we have intraday swings. We don't know which way things are going. Yesterday, a Batman would have produced a nice profit. Of course, if we just did a single out-of-the-money fly yesterday, it would have produced an even better profit. So you choose your poison. We put the Batman on mostly because some people have a hard time with being wrong. And it's funny because by choosing that market neutral position, you end up being wrong more often. Not wrong, but you diminish your return overall. But you're right more often. So you get a win, but you get less a piece of the pie. When you're more directional and you take a stand, that is a much more powerful position. So yesterday, instead of a Batman, had you put on a large put fly, as we illustrated, would have made way more money. So just consider that. It doesn't pay to take half measures. The Batman's there for a reason, and it does pay sometimes, but I'm just saying, in most cases, it doesn't pay to take half measures. All right, so let's take a look at the directional bias. The directional bias this morning is still down, as you can see. bearish directional bias because we're below the moving average, although things are kind of getting a little wonky here with the hull. Doesn't seem like it can make up its mind, but it's still down. So that means that if you are going for a single out of money fly, we're looking at put flies, and we're looking at them to be very wide. All right, so here's our situational analysis with respect to the volume profile. These are our structural levels, 52.35 and 52.82. Those are levels that we think that the market will pull up to and then move down. So we're looking for an entry event there or there. And we're right here, right at the bottom of this node. Like I said, if we move down below here, the air is thin. And I'll show you that right now. So here we are. Here's that major node and the top and bottom of that node that I just illustrated. And down here is all thin air. Even if we brought in a lot more, you can see there really hasn't been much market activity down here. And so it just, so you can see, it's just, there's not much down below here. It's fragmented at best. And so that presents a huge risk for markets that, that fall into this area and potentially can drop very quickly. So that's all part of that analysis. That's why we're so concerned about puts just exploding. That was the zinger on the video thumbnail this morning. But that's why we put it there, because there is a definite threat. All right. So back to the big head. All right. So that's this morning's market analysis for Zero DTE traders. Should be another exciting day. All of these days with this elevated volatility are pretty cool. It gives us great opportunity, movement, and putting on much larger trades with no more risk. That's the real cool part. You can put on much larger trades and push them further out of the money and feel like, you know, you're just invincible because the market's moving, volatility's low. You don't have to worry. If it goes against you, no big deal. If it goes towards you, you make a big score. All right, and that's going to be it for today. I want to thank you all very much for joining me. And this is Coach Ernie, and I am out.